Hi everyone, my name's PK, and here I have Gilbert Melgar here again. This episode, we're going to be talking about the worst suburbs in Brisbane to invest in. The worst suburbs. We're going to go through a Brisbane property market update. We did one similarly with Gilbert on Melbourne about a month or two ago. Gilbert, of course, is from suburbsfinder.com.au. He has fantastic tools there. Go and check it out. But in this session, we're going to do a deep dive on Brisbane. And I wanted to start the session by sharing the statistic. It says that the gap between Brisbane and Sydney median dwelling values has now narrowed to less than 22%. This is the closest margin between Brisbane and Sydney since 2013. Now, that may or may not mean a lot to many of you, but traditionally, Sydney's median dwelling value has been way more than Brisbane, even up to like 80, 90% more than Brisbane. So the fact that it's down to like 20% or 22% is pretty phenomenal. And we're at a fork in the road because back in 2013, when it was like this as well, this narrow, Sydney had one of its biggest booms ever, much bigger than, in fact, its latest boom during COVID, in which it grew, I think, less than 30%. Back in 2013 to 2016, it grew by more than 40% over that time period. So, what's going to happen now? Let's go through that a little bit, but also the worst suburbs, because if indeed this gap has narrowed too much and it's not going to narrow anymore. In other words, Brisbane isn't going to grow too much anymore, despite the Olympic Games story. Then these are the suburbs, according to Gilbert, that are probably likely to do the worst. And so you got to be very, very careful in investing in these. And even if you're an owner occupier, you're looking to buy your first home and you're like, okay, I know it's an emotional decision, but I also want to buy a home that rises in value so I can take equity and start a portfolio. Or I want to buy a home that rises in value so in the future I can move out and make it an investment. Then this episode is also going to be 100% relevant to you guys. But I'm very, very grateful, Gilbert, for you making time again. You always bring a lot of data and intellect to the table from your experience. So I'm very appreciative.
Thanks for having me again, PK. Yeah, it's really interesting that the gap is just that's only 20% now, right? Brisbane has really come along.
Imagine like imagine in 3 years' time or 4 years' time if Sydney continues to underperform, which it is at the moment. I mean, Sydney's the most unaffordable housing market in Australia, and if interest rates don't fall, which they're not likely to fall too much, if any, in the near term, and God forbid they start rising, then Sydney's unlikely to have a huge boost. And so you might see Brisbane continuing to go up. Wouldn't it be crazy if it actually became on par in a few years with Sydney, just like Perth was, more than 15 years ago? I think it would be really scary to be investing at that time in Brisbane, but it would be like a wacky thing for Sydney house prices to be the same as Brisbane. But let's see, anything can happen with the Olympic Games. In fact, this is not scripted, so forgive me, Gilbert. But just on impromptu question, what's your perspective on the Olympic Games? So many people, property experts and also not property experts, they say that the Olympic Games means that house prices in Brisbane are going to go up basically in a linear fashion or at least pretty consistently all the way to 2032 because that's what happened with the Sydney Olympic Games. But do you have a perspective over this and what should property investors know that you're thinking
Well,
about?
my opinion of that is it's just going to continue moving up. The only difference is because of the Olympics, now all the infrastructures are being fast tracked. Okay? So it will just add more, I'd say, gas on or accelerate that that price increase. First, because it's still affordable compared to Sydney. So migrants like me, who moved here 15 years ago, will definitely consider Queensland, Brisbane as a first option because of affordability, right, compared to Sydney. And in terms of jobs, there's a lot of jobs that people can have in the area. So I'd say definitely there is momentum about to happen. First, because of affordability and continuous migrant influx. Yeah.
I think you're right. And, recently the RBA shared that the national CPI or inflation rate was about 3% at a national level, but WA and Queensland economy, inflation for those two states was running above 5%. So you can see just how strong those economies are, how much they're booming, therefore wages and prices are going up, which is a signal of strength, at least in those two
Yes.
states. So I think that backs up your story. So maybe the right way to preface these suburbs that we're going to start talking about is that it's not necessarily that they're going to fall in value or that they're going to topple, but rather from a relative perspective, these are to be the least well-performing suburbs out of all the other suburbs in Brisbane. Is that the right way to frame
Yes.
it?
Yes. That is correct. I would say they're still going to perform, but there will be other suburbs that are going to perform better, right? So
Right.
think of this like in the classroom. So most of the students who are most delinquent probably they're all on their last row of the class, right? So that's how I define it. Yeah.
Got it, got it. I think that's really important to know this concept, and I think investors at least should try to optimize their investing using data like what you're going to share, because even a 1% difference in capital growth over a course of 10, 20 years is hundreds of thousands of dollars. So it's not a case of, hey, which state should we invest in? Which city should we invest in? It's a case of, okay, which suburb should we invest in? Which street should we invest in? Because even small differences in growth percentage add up to hundreds of thousands of dollars in
There's
missed opportunity over the long term. Anyway, that's enough preface. I don't want to waffle
Yeah,
on.
that is totally I totally agree with you, especially if that 1% difference, uh, if you can catch that between your first up to 3 years, right? That's gonna be a massive difference.
100%. Yeah, 100%. Okay, let's go.
Yeah, yeah. But first, before that, I want to set up how I came up with this list. So I, you know, I put in some different metrics. So combination of price and demand momentum. So weak or negative changes over the past 3 or 12 months, and also liquidity pressure, meaning there's a rising days on market and for sale listing or stock are has been going up, and then rental yield are under 3% or rents are flat, hasn't really changed, or if it has changed, very small increase on median rent. And then uh, structure and demographics. So population growth, most importantly, the employment access and distance to the major infrastructure, major employment hub. And lastly, infrastructure projects happening within the area, such as residential and even commercial. So, because those will affect the supply in the future. First on my list would be Russell Island. Median price has been really going up. So, over the past 3 months, that's a 6% increase, $25,000. Over the past 12 months, that's 12%, and over past 3 years, that's a 35% increase, which is equivalent to 160. Prices is the median price is the blue bar, and days on market is the line graph. Yeah, so you can see the relationship there. At first glance, it might be, wow, this is great, right? It's performing really well. But over the past 3 years, it has grown by 35%, right? So that is, we can say, it's already on the peak side of the market, right? Or peak cycle. So I would say, and then can have the listings. So the listings continuously go down, but it's relatively flat right now, or it has been increasing. Next, vacancy rate. Vacancy rate is relatively still low considering it's under 3%. Eh, And the sale listings as well has been still low compared to where it was a couple of years ago. And stock market, this is relative to the whole area considering the size. It's 4.55%, which is pretty high, but considering the size of the area. And median rent is what I was talking about. Rent has really been not in, well, it has improved, but not as significant as other areas. Okay? And then lastly, the yield has been 5%. It's you'd say, ah, it's really good, it's 5%, right?
Hmm.
And the thing is, the EARSAT or the socio-economic index for areas, which in other words identifies if the area or the people living in that area are affluent or not. Right? So it's still on one. Right? So over the past 20 years, it hasn't really improved. So we can see that here in the their summary here. So over the past 20 years, the income hasn't really improved. The only way to access the area is by ferry. There's no other way to access it. Plus, you can see here, hasn't the median household income hasn't really improved that much over the past 20 years.
Yeah.
So
So it's
what
a high
would
risk
be the
play at this stage,
yes, yes.
and, and
It will work for other people, like I said, who already has a good portfolio. But for someone who's starting, it's a big risk.
I know a bunch of people have made a lot of money in Russell Island, despite I've always said that it's probably not the best area to buy in, but it seems to me like one of those high risk type, high return investments a few years ago where, okay, there's a lot going against it, but it paid off for them. And I think a rising tide lifts all ships. And, according to Oliver Human Report, really good, reputable company, Southeast Queensland median land prices, they surged to above $1,000 per square meter for the first time ever. And this is actually more expensive than Melbourne. $1,000 per square meter for land in East Queensland is now more expensive than Melbourne for the first time ever. So when that phenomenon is going on, even these smaller islands, Russell Island, etc., they get that ripple effect, they get that contagion effect, they get that impact from that. So I think it's benefited from the whole Southeast Queensland boom story. Okay, next suburb.
Next suburb would be on our list is Palabra at 970,000 with a compounded annual growth rate of only 4%. I mean, that's a high entry cost, right, for an initial investment, 970. And also with a rental yield of only 3.81%. So if we're going to invest on something like that, then we might as well go for a higher yield with a higher probability of getting higher growth, right? And the vacancy rate is 3%. Right?
Wow.
Although days on market has been going down, but the stock, let's have a look at the stock. Stock um, has increased actually compared to where it was before. But the pretty interesting thing here is when I look at the development approvals, you can see here proposed residential subdivision, right? So this is how many lots. So this is that area. And you can see here what? So there are 20. So they are subdividing that into 20. You can see here there's a lot in here that has been just recently launched.
And I think,
Um,
just where it is,
Pallara.
it's a lot of Pallara is new in nature, and then a lot of first home buyers have bought there because it was relatively affordable. But it's all the way out in Forest Lake, which if you're not from Brisbane, in the Brisbane context, is like a long way away for most people. Forest Lake itself is, right on a fringe in terms of where the city ends, and this new suburb, Pallara, you're seeing a lot of these cookie cutter type 3 bedroom, 4 bedroom, small houses, small land. And you can see as you're demonstrating lots and lots of new building approvals. So this is why a lot of people have are knowing about Pallara because a lot of project marketers, those dodgy type of buyers agents that advertise home and land packages and get kickbacks, they are buying for their clients in Pallara. But really, because of the supply story, it's not the best decision, especially at current yields.
So next on our list is Capalaba. Sorry. I've been here for 15 years now, and I'm still getting the pronunciations not right.
Yeah, I think you have
Still
to be a
getting used
Brisbane
to it.
local to know how to pronounce some of
Ah,
these.
yeah, probably that's that as well. Yeah. So pretty much same with Pallara. So if you can see here, at an entry level of 961,000, right? That's pretty high. And then the yield, you only get a yield of 3.68, right? Although the 10-year compounded growth rate has been really good at 7.87. You can see here, all the days on market as well is only 11. But the thing is, even though the days on market is just one, and so you have to consider other metrics as well. So if you can have a look, days on market has been continuously going down. See vacancy rate has been pretty consistent, low at below 2%. And let's have a look at the sale listings. Sale listings has been going down as well. But how about the number of people looking to buy? So number of people looking to buy has been pretty consistent and increasing. But what intrigues me is, again, when I look at the number of development applications submitted to the council. Similar story with Pallara. So we can see here 23 lots subdivision, which was just submitted. Aside from that, there are other subdivisions as well. So
And I think the
one,
state government
two,
actually
three,
recently
four.
came out and said that in and around Alexandra Hills and these areas that are in, I think in Rendlesham Bay Council, if I'm not mistaken, they're trying to build, or their plan is to build another 7,000 homes in the next 10 or 15 years. So
Wow.
that is a lot, and of course they're not all represented in this website just now
Yep.
because that is the plan. They're not all technically approved by developers, or the development approval hasn't been lodged. But if you know that, then you know that, okay, the yield is so low, the entry price is so high. Yes, it's a great place to live, and historically, from an investment perspective, it's been great. And I'm not saying that you should sell your properties here, but from a market entry point perspective,
Yep.
right now, the strategy might be less than ideal, knowing all this information. My
Correct.
clients were buying there around 2020, 2021 for like $500,000. And at that time, it seemed quite expensive. Now you're saying it's just shy of a million. So definitely is quite expensive now. Maybe we'll
Yeah.
be, eating our words in 5 years' time when these are all 1.5 million. But let's see, time will tell.
Yeah. I totally agree with you. So last on the list is Alexandra Hills. So hopefully I got that right now. Yeah.
Yeah. So right next to Capalaba, basically, in the Redland City
Yes.
Council, sort
Yes.
of for those of you who don't know, sort of southeast of the Brisbane River, southeast of Brisbane CBD.
At nine, although lower entry at 920 compared to Capalaba and Pallara, still that's pretty high at a yield of 3.82. Although the compounded growth rate is 8%, and then the vacancy rate has been consistent on, let's have a look, consistent at 1%, below 1%, which is really good. But as I said, another thing that you can need to consider are the development application approval within that area.
Because 1 into 2 is not really going to make a difference. It's when we see
Yeah,
1 into 20, 1 into 30, and
into
we see
20.
dozens
Yep.
and dozens of those. Those are the ones that really strike a chord and raise the warning flag, right?
Yep, that's correct. That's correct. And of course, if it's 1 into 2, but if there are 10 or 20 of them on a separate development application, then, small, but the volume, right? So there's
Starts to
still
add
a
up.
lot of happening in the area. Yeah, it will add on.
I
Yeah.
really like how
So
you're
number of,
highlighting the development applications because I think a lot of people, investors these days, they look a lot of data, but they ignore some of
yep,
this more, you could say, qualitative data where you go through the building approvals and see what the approvals are, how many applications are there, how many lots are going to be released. And I think you doing this research also helps you understand the area. It's not just a case of, looking at five or six or seven check in the box data points. Is it
yep.
right? Yes. Is it right? Yes. Is it right? Yes. No, you have to delve a couple of layers deeper into what you're showing us to really understand what's going on in the suburb. And of course, you know that I look at 30 to 35 data factors, and I think this is a really good example of something it is data, but it's more like qualitative data, and it's something that requires a little learning to understand how to maneuver and navigate and understand it.
Plus, it lets you understand what, if you really want to buy, it lets you understand what your potential neighbors are doing in the area, right? Are they submitting a lot of granny flat application? So if they are, then if the property you're buying is feasible for putting one, then highly likely you know that you can do that as well. Yeah, so those are the lists that going through that. So we have here Russell Island, Alexandra Hills, Capalaba, and Pallara.
I thought it was interesting that two of them were in that southeast part of Brisbane, so right next to each other. So that kind of confirms that the data's probably the least good in that sort of cluster because it wasn't just one random suburb. So it kind of tells me that other pockets of Brisbane, like maybe the north and the sort of southwest, not far southwest or out to Pallara, but inner or mid southwest and inner and mid north Brisbane are the ones that are likely to outperform. But thank you for the information, Gilbert. I think, this is obviously just a small tidbit. People should do their own due diligence and further expand their knowledge. And there's so much to be learned because I think going into property investing, especially if you're in Sydney or Melbourne and you want to invest in Brisbane because it's cheaper, don't just do it off a handful of data factors. Really understand it, really learn, use tools like the one that Gilbert has, and really invest in yourself because all of this stuff you can do yourself. Okay, it's not rocket science. I know sometimes, even when I was like starting off in property investing, if I saw an episode like this and someone like Gilbert sharing the development applications, I was like, oh my God, this seems really confusing. Like, I don't know if I want to learn this, but honestly, now from the other side of the fence, it is not that hard. You just have to spend like 5, 10 minutes and get your head around it. But once you do and it clicks, it's pretty straightforward. Anyone can do it. And in fact, as someone who's developed properties in the past, it's actually really juicy. When you go into some of these suburbs and you find, hey, so many people are splitting blocks, it's like, okay, well, the local council must be super favorable and the zoning laws must have recently changed. Therefore, why don't I buy a property like what all the neighbors are and I can split as well? And of course, easier said than done, but
Yes.
you split, make maybe one, 200, $300,000 over, 1, 2, 3, 4, 5 years, whatever the case is, whatever the commercials end up being. But, when you get into the data, whether it's qualitative or quantitative, it gets really exciting. And so I think thank you for, giving us a sample of that, Gilbert. Really appreciate your know-how.
No, no, thank you. I think, yeah, and and all of this data is out there. Yeah, can use free or paid, doesn't matter. Whatever will work for you guys. And there are other tools out there. At the end of the day, whatever will work for you, and whichever software would satisfy your requirements and meet your goals. But before you do that, you need to understand the data on how to read it, which is why you guys are fortunate already that PK has its course, because having the data is one thing, but the most critical thing is interpreting it, right? So that's why at least you have the course, you can teach them how, and next would be after teaching, knowing how, next would be just the implementation or taking action.
Right,
Yeah.
exactly. Okay, well, thank you, Gilbert, and thank you everyone for watching or listening. I'll leave a link below to the Facebook group with almost 70,000 people. It's called Australian Property Mastery with PK. I'll tag Gilbert there. Gilbert is part of that group as well. Many successful, hugely successful investors in there. If you have follow-up questions, you can also tag Gilbert in that Facebook group. Ask more questions, ask me more questions. We're only too happy to help. Hit the subscribe button, give it a like, and maybe share this with someone who's about to buy their first or next property or investment in Brisbane. Thank you so much. And once again, thank you, Gilbert.